Amanda, thank you so much for joining us. I appreciate this.
Oh, thank you so much for having me, Robert. It's a pleasure as always.
Today, I just wanted to kind of talk about title insurance. And before I go through, I just had a handful of questions. I want to just have you introduce yourself, say who you are and who you're with. And yeah.
Absolutely. My name is Amanda Lopez. I am the Executive Vice President over at Rise Title here in Austin. We are a title company that has the pleasure of working with brokers and agents like yourself. And we are just all about service and making sure that we do our best to explain the process and really just make sure that we make it as easy as possible for everybody and enjoyable.
Y'all have always been great and taking care of us. So thank you. And okay, so basic question, first question, a lot of people may kind of know, but a lot of times don't know, what is title insurance?
That's a really good question. And I think it can be a little confusing for a lot of people. Title insurance is a contract of indemnity or an insurance policy that protects your ownership in real property. What that means is that if there's a defect in title or a claim to title that was not spelled out in your policy, it would cover those items. Unlike a homeowner's insurance policy or other insurance policies, title insurance protects the owner of the policy from past errors that are related to the ownership history, not future risks like a homeowner's insurance policy or a car insurance policy would. There's typically two different types of policies that we issue on residential transactions: the owner's title policy that protects the new owner of the transaction, and the lender's policy that protects the lender.
Is there any other types of coverages like survey or?
Yeah, absolutely. So, yeah, there are what we call endorsements to the policies. And what endorsements are additional coverages that can be included on those policies. For an owner's title policy, we have two additional coverages. That would be the area and boundary coverage, which would be items that are reflected on the survey. And then the T19.1, which is a fancy way of saying the restrictions, encroachments, and minerals endorsements, which would cover for prior violations to the HOA's restrictions, as well as for any encroachments on the property that were not accurately reflected on that survey as well.
Okay.
Yeah.
So then that makes sense to me. And I personally, anytime we buy a property, we also have title insurance because I don't want any sneak attacks on anything. But,
Yeah.
so tell me why a buyer would want a title insurance and why would a seller make sure that there was title insurance?
Yeah, absolutely. When you buy title insurance in Texas, I'll speak to Texas just because I'm not very familiar with other states. The title company will do the heavy lifting and search the public records to find any defects that need to be cured or cleared up prior to closing. So some examples of some things that we might discover and help cure are deaths in the chain of title, divorces, improper legal descriptions, survey discrepancies, and unpaid liens that could all affect the ownership of the property. Title insurance gives the buyers and sellers the assurance that they are handling that we are handling the transaction with proper care, and that if an issue arises in the future, you have the resources to address it. We can't make an assurance or a guarantee that you'll never have a problem because there's occasionally things that are unrecorded at the time of closing or that aren't issues when you buy a property. But it does give you the peace of mind that the title company will be there to help address the problems in the future if there is one.
Do you have a couple, I hate to ask it this way, but like bad examples of, here's some things that have come up and here's what could have happened, with or without title insurance?
Oh, I think everyone always remembers the horror stories, right? The bad ones are the ones you don't forget. So I've got a couple examples. So first, think about a home buyer who finds the house of their dreams only to find out after closing that there's unpaid property taxes from the previous owner that carry interest, that carry penalties, and those unpaid bills are tens of thousands of dollars. Without title insurance, the financial burden of that would rest solely on the buyer. So they would either have to pay the taxes, they would have to file a suit, or try to contact the previous seller to get that mitigated, all on their own. Under the same scenario with title insurance, the coverage would protect the buyer for as long as they own or have an interest in the property. Another example would be, again, after closing, because that's when the policy goes into effect, that the buyer finds out that a previous seller was married for a period of time. and they owned the property while they were married. Now, all of a sudden, this former spouse is claiming an interest in this property. Again, the burden of curing this would be on the buyer entirely without title insurance. But with title insurance, we would handle that legal process for them. There's a whole list of other items, but just to give you a few examples would be prior HOA violations, invalid documents due to forgery or fraud, which is very real right now, failure of a person or entity to have authorization to sell a property, an invalid foreclosure. There's all sorts of different means or ways that there could be a claim to or defect in that title.
Okay. Do you see people not doing title insurance on any contracts? And I know you're a title company, but just, do you see that very often?
Not very often, but we do see it. Lenders will require it always. It's very rare that a lender doesn't require title insurance on a transaction. And so the cost for it when you're purchasing title insurance and you purchase two policies at the same time is such a nominal cost, and it's a one-time fee that most people, they would rather pay for that assurance than not have it at all.
Yeah, I even see developers that come in that do this every single day, and they're buying, multi-million-dollar projects, and they're always getting title insurance, at least from what I see, right? And so they need to know what they have is free and clear, and they're not going to have any issues down the line. So that's
absolutely. Investors, flippers, even we deal with a lot of investors here at Rise, and almost all of them always purchase title insurance. There are title companies out there that won't close a transaction if you don't purchase title insurance. They'll require that you go to an attorney. So that's another thing to be mindful of, is that you won't even have the title company to walk through the process sometimes if you don't purchase that title insurance.
That makes sense. So then is the title insurance, is it different at the cost of it different at different title companies, and how do the rates work? What does that look like?
Yeah, so the rates for the policies are promulgated by the state, which means that they're the same no matter what title company you close with. The good news, again, like I mentioned before, is that unlike homeowners insurance, title insurance is a one-time cost that you pay at closing that will cover you for as long as you own the home, and will cover a lender for as long as they have a mortgage on the property. It's kind of hard to just give you an exact formula because there's a ratio that we have to use to calculate the premium based on the sales price of the home and the loan amount. But I can give you a few examples on that cost in just a second. The only other thing that I will say again is that when you purchase a simultaneous policy, so that owner's policy and that lender's policy, the second one is discounted to $100 plus endorsements. So you don't have to pay that basic rate. So I kind of did some pre-math. Let me share this with you really quick. My first example would be on a $500,000 cash transaction with no lender. That means there would be no lender policy. So this would only be that owner's title policy. The basic rate for that would be $2,940. And then again, if you wanted those two endorsements, like we talked about before, that area and boundary or survey coverage, and that restrictions, encroachments, and minerals endorsement, those would be $147 each. So the total of that policy would be $3,234. And then a second example would be on a $750,000 transaction with a $500,000 loan. This would result in two policies, your owner's policy and your lender's policy. The owner's title policy would be $4,258. With the two endorsements, it would be $4,684. And the lender's title policy would be $100 because of that simultaneous issue, plus the endorsements that the lender requires. So there's a whole list of additional coverages that a lender can add to their policy. On a typical transaction with a fixed rate loan, that would be roughly $222 for a total of $322. That means the total policy expense on a $750,000 transaction with a $500,000 loan would be $5,006.
Okay. And then a lot of times I'll have my clients or our clients, they'll ask, well, who pays for it? And I always let them know it depends. I've seen it when it was a buyer's market, the seller's paying for it. When it was a seller's market, the buyer's paying for it. And ultimately, and then when it's a kind of an even market flat, it becomes a negotiation. We'll pay you this for the house, and this is who's paying HOA fees, this is who's paying title insurance, and it kind of breaks down. So it all comes down to negotiation
Exactly.
yeah.
Right. And that's where it's important to have a good agent like yourself out there that knows what's happening in the market and how you can stay competitive with your offer in that negotiation for sure.
Yeah. And because I've seen it where the wrong offer was presented in the wrong market and to the detriment of the buyer or the seller. Right. But they didn't know. And on our side, we're like, well, that's to our benefit. And so we can kind of work through that. So we're always kind of educating on this is what's going on in the market. And yeah, we always say we make recommendations, they make decisions.
Right.
Yes.
So you're the vehicle for their wishes.
That's right. That's exactly right. So kind of a more of an agent question, but I still want to ask anyways, when's the best time to open up title? And are there any other instances that you might say do it at a different time because this is what's going on?
Absolutely. I think that there's definitely some instances when we know that there's a red flag and we should start the investigation or the research process well before contract. That would be some of those instances of a potential claim like we talked about earlier. So death in the chain of title, one of our sellers maybe has been deceased, or there's some sort of defect that it was originally owned by their father who passed many years ago and it's changed hands. Anytime you think that there's a gap in that chain of title, we want to open it up well ahead of time. Divorce, the same thing. We have to order certified copies of divorce decrees most times in order to ensure that we're meeting the terms of those divorce decrees. And that can take a while, especially if the divorce decree was filed in a different county. If there's an issue with the legal description, if we don't know what the exact legal description is because this parcel has been carved out of a larger parcel, that's another instance where we would want to verify that ahead of time. Or if we need to order a new survey on the transaction, we want to get title open so that we can get that ordered. Not so much today, but a few months ago, surveys were taking a long time to get in, and they could cause delays in closing. And so it's always, I say, in your best interest, if you're unsure, reach out to us or your preferred title company and let us get started on the research piece before you go under contract. You don't have to, but that's kind of my general rule of thumb, is that it does help to have the research started before you get under contract.
One more question I have, and I think this is really important for consumers because we really like to make sure that our clients and all consumers are protected here. Tell us about wire fraud, because I know that's really big right now. And just, yes.
Yeah, wire fraud is real and it is rampant, that's for sure. What wire fraud is, just if there's anybody out there that doesn't know, is that there are people out there, organizations even, that install phishing software into typically an unsecured server. So typically a consumer, occasionally realtors that use Gmail accounts. And what they will do is they will lie in wait and they will look for information that pertains to a real estate transaction. And when they see a contract that's sent over or terms that are being negotiated or preliminary fees, they'll insert themselves and pretend to be a party to the transaction. They typically try to misrepresent themselves as either the title company or the lender. And what they'll do is they'll give instructions for the buyer to wire their proceeds to an improper account. And then what happens is that all of their hard-earned money is gone. And it is devastating. There's been instances where people's entire life savings have been wired to an improper account. So I just always encourage consumers to, one, make sure that you talk to the title company at a trusted phone number and verify their wiring instructions, however they send them to you. And two, that you are really staying diligent and paying attention to the email addresses. That's generally the number one indicator that it's not the right wiring instructions, is that the email address won't match the domain for the title company that you're working with or the lender that you're working with. It'll be off by one letter, or it'll be missing a letter, or something will just be off there. At a previous company that I was with, we had an instance that happened and the account name was something that was just wildly obscure. And unfortunately, the consumer sent the money to this account. And so just stay diligent. It's always better to be overly cautious, ask a million questions, make sure that you're sending your money to the right account. That's what I always tell people.
Because if they wire $400,000 to somebody else, odds are they can't get that back and it's gone, right?
Yeah,
That's
we have some great information about like what to do if you've become a victim of wire fraud. They recommend that you reach out to the FBI, that you reach out to your bank immediately within 24 hours, that if you can. And what they can do is they can attempt to pull the wire back. But there's no guarantee. You know, I've seen it where they've gotten all of their money back before. I've seen it where they've gotten a fraction of it, you know, and I've seen it where it's gone, you know, and so unfortunately it's just it's really real and it's in our market, and you just have to do, I know you guys do a great job of educating your clients, which is why you're asking questions like this, but the consumers just really need to do their due diligence and make sure they know where they're sending their money.
I agree. Always ask everybody and
Yes.
ask your agent
A million
everything.
times.
Yes.
That's a question we'll never get sick of hearing.
Boy, I'm just a bit, again, big advocate for consumer. And if this is one of their biggest assets and they only do this every so often or whatever,
Right.
we just want to make sure we can educate on everything that we can. And so this was a big piece of that. So thank you so much.
Thank you.
Anything I didn't ask?
No, I think that those are all great questions. If there's anything else, or if you have anybody that needs follow-up, I'm always happy to help.
Okay. Well, we appreciate y'all so much. So thank you.
Thank you, Robert. Have a good one.
You too.